Welcome to the 10th of March. Today we were waiting for NFP and unemployment rate, which came out as mixed data. We had unemployment rate actually rising by 0.2%, which is obviously bad for the economy, and feeding into Fed pivot prayers. And then we had the NFP numbers come out better than expected, lower than previous, but previous was a bigger surprise number. So this time we saw over 300,000 jobs being created, which is obviously good for the economy and promoting dollar domination narrative. So as you can see here, I was expecting both the datas to come out more positive and therefore push us down. We didn't get that at all. We actually got the complete opposite, so I was wrong this time. If we click play, you can see shot up, but it doesn't mean we didn't capitalize on this move, right? I also did mention to stay adaptive, right? As the data gets released, make sure we stay adaptive, and otherwise, if we just stick to one bias when we don't actually know the data's out, we're going to miss out on opportunities, which didn't happen because we did stay adaptive. And this time I did want to show you my actual live chart on TradingView. I thought mix it up a bit. So initially, as you can see, we were going for sales in the upwards trend, right? I was trying to, and I'll quickly flip over to my terminal. I was quickly looking for, sorry, not quickly, but I was looking for sales to continue that move downwards after we had such a huge push up. So after a big impulsive move happens, there has to be some sort of correction, right? Or not has to be, but usually is, especially when the main narrative is not in favor of this move, which at the moment dollar domination is more on the market's mind than in Fed pivot, in my opinion, and from what we can see from the data and how the Fed are reacting, right? So my first sale was from roughly 246. So after NYSE open, I thought as a bit of consolidation. This was very aggressive, right? These are all high risk, high reward sales, right? Because we're against the lower time or the impulsive trend, let's say. So I expecting this to give us some reaction at one of the key levels. It didn't, and it got a bit in the bum for that. That's fine. Same again. My second entry, I was looking for the same thing, just sales. This one had an actual pullback. This is a push down, pullback, double top. I expected double top and then continue down, didn't get it. We're still going against trend. This was the new 1 hour at the time, so 320. I was like, right, this is still going to go up. It kept going up, and then we started seeing a slowdown, right? We saw a lot of rejection, which we didn't get before in 1 minute, and then we started continuing down. So after this double top, so 1, 2 double top with lots of rejection wicks, sorry, I entered right with after this big bearish candle, stops above, it's about 20 pip stop, and down we flew. It never even took. I got about 80 pips. I closed that roughly, and I did go up 110 pips. And I'll talk about why we didn't close. So that was my two trades and my wins. Overall 4.5% day, not too bad. Sticking to my plan, really good. I can argue, and I agree. Both these trades are extremely aggressive. I think I should have waited for. And what I'm going to show you is my next stream, back to TradingView. So when we're going, this is what I should have waited for. When we're going through our trades, we can see this is trending extremely bullish, right? We always respect this line in the 1 minute. And then my entries were roughly in here somewhere. So this trend line, let's say, was never even touched, never even broken. So taking any trades before this is even retested like this, for example, is very risky. This entry was my second one around here, extremely risky. We're respecting the trend line, no break of it. So we kept pushing up, no sign of bears breaking through. And then this is where we got the breakthrough. We got the breakthrough here. And then we got a rejection again, and that was my indication here. I was like, right, we're respecting it. Now we're creating a downtrend from this roughly key area right here, key level right here. Continuation down, which we got. Like I said, we went up to 100-ish pips. And for me, that was perfect. Beautiful entry. I was playing all the way down to 1847. If we hop on the 4 hour quickly, I'll be able to show you. So the 4 hour, we were just looking for a nice, either retested this level, which we did get, 1855 500 roughly, which is also a key level. We did get a reaction at this level, and that's where I mainly closed most of my profit, around that level roughly. My actual TP was down at 1847, as you can see here, reactions at these candles, and on the hour reactions here as well. So I was getting, that was a very ambitious target. We still closed and anticipated a reaction at the 1855 level, which we did get, and it makes sense. So we did close, and we're happy with that. It is a pullback at the end of the day. You can't play against a current short-term trend. Overall, if I held the trade over the weekend, potentially could come back down, and most likely will. But I didn't potentially or didn't want to risk that. So I was happy to close that, especially after 2 losses, take my profit, finish on a good week, and go into the weekend. So that was the trades for the week. Hopefully you will take advantage of that. If not, you could have taken momentum buys with the trend. Once the data got released, plenty of buy opportunities to continue up after we had mixed data. And there was a 300 pip move overall upwards, so you definitely could have taken advantage of that. So going into next week, we've got plenty of news. I believe we've got the inflation rate for inflation rates. So FMC we've got on the 22nd of March now, not next week. Next week we do have the CPI and inflation rate next week. Then we have unemployment rate for GDP. So a lot of data next week as well. PPI. So plenty of data to keep us on our toes and to see how the market reacts to all these data releases. So keep vigilant and keep practicing.